What's up, everyone? Rose Brown, the accountant therapist here, and welcome to another week of Tax Tip Tuesday. This week I'll be talking about student-related credits and deduction tax, that is, because I remember back in school, it was nice getting that little refund because I was a student, and then being awakened by the fact that, hey, once you're out of school, you're no longer eligible for some credits and deduction that you once were eligible for. So stay tuned as I talk about that. And hey, you could be the student, your spouse could be the student, or your actual child could be the student, okay? So there's a couple of things at play here that I want you all to know because it could backfire, cause penalties and fees down the line, but once you know, you'll then be able to apply that to your situation, okay? With that being said, I am the CEO of Brown's Fulfillment Consulting and Accounting Firm, and we provide an array of accounting services to both individuals and businesses all over the United States, really, regardless of where you are, even though we are located in Center City, Philadelphia. And of course, taxes are a part of what we do. So if you have any questions regarding tax preparation, you can certainly reach out to us, okay? If you do need to get in contact with us, you can do so through email at info@brownsfca.com or visit our website if you want to kind of browse and see what's going on, www.brownsfca.com. And then if you do need to follow us on social media platform, you can do so using our handle at brownsfca.com. Okay. And as for myself, you can follow me on social media platform at The Accountant Therapist. Okay. And don't forget, I am here every Tuesday at 7 p.m. breaking down a new tax topic, really helping the general public to be able to understand how taxes impact their individual situation. And hey, even if it's not directly impacting you, I'm sure there's someone within your circle that could certainly use these particular type of information. So don't forget to like, share, comment. And I'm always around if you have any questions. Again, send us an email, info@brownsfca.com. Okay, so let's quickly recap last week before we dive into this week's conversation. So last week I talked about how to prepare for tax season as a self-employed individual. Now, prepare for tax season can be daunting as it is, but as a self-employed individual, it's more manual because you're not just waiting on, say, your W-2 and then you head on over and file your tax return. No, it's a lot more. You have to ensure that you have all your 1099s, right? You've gathered all your revenue, regardless of where you received it from. That could be you received it through PayPal, Cash App, Zelle, however you received it, you have to be keeping track of that. That's why it's good to have a good accounting system in place. And then as per your expenses, the question oftentimes is, well, what's a write-off? What's deductible? And these are things that you want to make sure that you keep track of so that when tax time comes, you are writing off all that you can, okay? So that could mean you did Uber. You want to make sure that you capture all your mileage, right? All the fees that you paid. For 2020, a lot of us worked from home. You want to make sure that you are taking advantage of the home office deduction. And then, of course, if you had other office supplies, you bought a new printer, you needed a new computer, whatever it may be, you want to make sure that you capture all of those, okay? So that's just the brief synopsis of what I talked about last week. But you can also head on over to our website. We have resources on there to kind of help you become prepared, if you will. So it's a checklist that helps you become organized, gives you insight to what you should be looking for as it pertains to what you do, whether you're an individual or a business, okay? And again, that's www.brownsfca.com, okay? Now, as for this week, let's talk about student-related credits. Now, there are credits and deductions. As a whole, credits are often more favorable than deductions, and that's because a credit will either increase your refund or decrease your tax liability, whereas a deduction will basically just reduce your taxable income, which in essence could increase your refund or decrease your tax liability. But the credit is more favorable because it has a more direct impact on that bottom line of the tax return, okay? So keep that in mind as I talk about credits and deduction moving forward. So I'll be talking about 2 credits, student-related credits, and 1 deduction. So the first one is the American Opportunity Tax Credit. Then you have the Lifetime Learning Credit, and then you have the Tuition and Fee Deduction. Okay, so I'm gonna start off first with the American Opportunity Tax Credit. Now, with this credit, it's more favorable among all three of them because of the benefits that it gives you. Okay, so in order to be able to take advantage of this, you have to have a valid TIN. That could be in your social security number, an ITIN, or an ATIN. And again, as it pertains to a student, the parent could be the student, the spouse could be the student, or the actual dependent could be the student. So you want to keep in mind all of these scenarios as we move forward. Now, in addition to that, the American Opportunity Tax Credit, you can only claim it 4 times. So this is often used by individuals going to school, obtaining your traditional degree, or a accredited education credential similar to that. But you can only claim it 4 times. So typically that's your undergrad. So when you're in your grad portion of school, you can't claim this anymore. Okay. Now you have to be in school at least part-time in order to take advantage of this. The great thing about this, the one that a lot of people really look forward to, is the fact that it's a credit of up to $2,500. What that means is, when a student file or the parent claims that child on their return, you can claim a max credit for that portion of things of $2,500. However, this has 2 parts to it. It's both a refundable and a non-refundable credit. And what that means is you can take some as a refund and the rest can only offset your tax liability. Now, because it's a max of $2,500 for the credit, the max refund that you can get from that is 40%. So that means the max of $2,500 is $1,000 at 40%. So you want to keep that in mind. So it doesn't matter what amount that you are eligible for, only 40% is refundable. So keep all of that in mind as you move forward. Now, with a lot of credits and deductions, there comes thresholds, meaning it phases out to the point where you're no longer eligible to claim it. So as it pertains to the American Opportunity Tax Credit, once you start hitting over $80,000 in your modified adjusted gross income, you then begin to phase out. Once you hit, 190,000, Once you hit 90,000, you're no longer eligible to claim that credit. Whereas if you're married, filing joint, that doubles. So you're at 160,000. Once you hit that point, it starts to phase out. And once you hit 180,000, you're no longer eligible. And again, married, filing joint. Okay. Now, the last thing to note about this is if you have a felony drug conviction as of the end of last year, you're not eligible for this particular credit. Okay, so the next one is the lifetime learning credit. With this credit, unlike the American Opportunity Tax Credit, you can claim it an unlimited amount of time. So it doesn't matter how many times you've gone back to school, you can still continue to claim it. So oftentimes, when an individual is no longer able to claim the American Opportunity Tax Credit, this is then the next best option for them to use because again, it's unlimited, and a lot of the stipulations that comes with the American Opportunity Tax Credit doesn't exist with the lifetime learning credit. However, typically you're a graduate student, if you're in trade in school, those are the type of individuals who often claim this. The thing to note is that it is a non-refundable credit. So that means you cannot receive any of this in the form of a refund. It could indirectly give you a refund in the sense that it reduces your tax liability to then increase your refund or reduce your tax liability altogether. Okay. But the max credit for this is $2,000. Okay. So that's the most you can get with the lifetime learning credit, and it's all non-refundable. And again, just like the American Opportunity Tax Credit, this too also phases out. So once you hit $59,000, you start to see a phase out. And once you hit $69,000, you're no longer eligible for it if you're single. Now, if you're married, filing joint, it starts at $118,000. And once you hit $138,000, it cuts off completely, again, ineligible to claim it. Okay. Now, all the information that you need to calculate your American Opportunity Tax Credit and your lifetime learning credit is often reported on Form 1098-T, and that is produced to you from the school. So, well, your financial education school. So what happens is all the expenses that you incurred will then be reported on inbox one. So you want to make sure that you obtain that, and really you should have already received it between the end of January to the first week of February. That's around the time that you should have then received it. Okay. Now that we've talked about both credits, let's talk about the deduction. So the tuition and fee deduction does have a phase out point with it as well. So if your adjusted gross income is 60,000, hi John, if your adjusted gross income is 60,000, you start to see that phase out if you're single. And once you hit 80,000, it cuts out completely. Whereas if you're married, filing joint, it starts at 130,000. That's when you start to see the phase out. And then once you hit 160,000, it cuts out completely. However, this particular deduction, 2020 was the last year that you can actually claim it. It actually stopped in 2017. However, they extended it up until 2020. With that being said, again, 2020 is the last time you can claim it. So oftentimes it's the lifetime learning credit and the tuition and fee deduction that goes head to head to see which one would work best in your favor, okay? But you want to make sure that you are following along with all the things that you need in order to be eligible for this. Now, because it's a deduction, it can only reduce your taxable income. It does not have a direct impact on your bottom line of the tax return. So your refund or your tax liability, it could reduce, again, it will reduce your taxable income, but it won't necessarily directly produce a refund for you, okay? So the next thing is, over the past couple of weeks, I've been talking about filing status, right? So one of those filing status, which is the married filing separate, it's in this case very unfavorable because if you're married filing separate, you cannot claim any of these credits, okay? So any of these credits you won't be eligible for if you're married filing separate, and a lot of other credits too, and that's why it's so unfavorable. So if moving forward, if it's a status that you must claim, then it's fine, but you also want to assess your other surrounding situation to ensure that you're getting the best benefit from the status that you've chosen, okay? Now the last thing here is the question then becomes, well, what about my child who may be in high school and they're taking a couple of credits at the community college? What about them? Are they qualified for anything? Absolutely. So if you actually had to pay for them to obtain those credits, okay, not including the scholarship that could cover those, but you had to go into pocket to pay for those, you are eligible for these particular credits and deduction. However, what you may want to do is take advantage of the lifetime learning credit at this stage in time, because the American Opportunity Credit, remember, you have 4 years and you want to take a good solid 4-year amount of that $2,500. Whereas if you're only taking, say, couple of credits here and there at the local community college, you may not be able to maximize the amount of benefits that the American Opportunity Tax Credit would give you. So you may want to go ahead and use the Lifetime Learning Credit because, again, it's unlimited and you can still see an impact on your tax return, okay? So with that being said, I will stick around for the next couple of minutes. If there are any questions, if it's a little bit too much for you, you can certainly go ahead and send me a message in Messenger, or go ahead and send us an email. Again, that's info@brownsfca.com. Now, just to do a quick recap, today I talked about 2 credits and 1 deduction. First, the difference between a credit and a deduction is that a credit will reduce your tax liability or increase your tax refund, whereas a deduction only reduces your taxable income. Now, the 2 credits were the American Opportunity Tax Credit and the Lifetime Learning Credit. With the American Opportunity Tax Credit, you can only claim it 4 times. Its max credit is $2,500, where only 40% of that is refundable. So there are two parts to that credit. Where on the other hand, you have the lifetime learning credit, where you can claim it an unlimited amount of time, but the max amount of credit on that is $2,000, and it is absolutely not refundable. So it won't directly produce a refund for you. On the flip side of that, we have the deduction, which is the tuition and fee deduction. Now, you can claim that. Well, last year, 2020, was the last time you can claim it. So when you go to file your return this year, if this is more beneficial for you, you can certainly go ahead and claim it. But again, it's the last time, unless Congress decides to extend it like they've done in the past, okay? And with this, you can claim up to $4,000 in deduction and tuition that you've actually paid out of pocket, okay? And don't forget, the information that you need to actually calculate this credit or deduction should be reported on Form 1098-T that should have been produced to you by your school. Now, if it's the case where you've paid interest on tuition debt, then you would receive Form 1098-E, and that's a different type of deduction, okay? Now,